Traders, Nick Shaheen here looking at Uber. Reported earnings last night, fell off a cliff, recovered all of it, now halfway in the middle of the cliff that they fell off of. So what to do now? I'm listening to all the experts, and only one thing worried me yesterday, which was the miss in sales. And I was waiting for him to explain how that happened, and he kind of explained it, only pulled a magician, him being the CEO, and he basically said, hey, you're looking at the wrong measuring stick. Let's look at something else. And he said unit volume. So I'm going to trust him one more time. One report doesn't change the upside potential of this company. Yes, they spend $1 billion, actually more. They lose tons of money, but it's not a matter of Lyft versus Uber. So I said yesterday, if I'm holding Lyft and I made money off of their earnings, I would book it and roll it into Uber, but for the long term. I'm not saying that Lyft is a better company. In fact, I don't even think they're competitors. Eventually, they won't be competitors. It'll be like Amazon and Walden Books back then, because Uber is slated to be global and not just a transportation for people. It's going to be a whole bunch of different verticals. They already have 3 or 4 going. They have Uber, Uber Eats, Uber Freight, which nobody talks about, and some sort of a aerial Uber that's going to be starting somewhere. So eventually it'll be anything. They could be selling tacos. I don't know. Their application is in every phone on the planet. How can you mess that up? So Lyft is basically said, we want to be here. We just want to be people movers. So do I sell it? How could I short the potential? If I don't like it, I just don't buy it. I just can't short it. Okay, so let's look at some fundamentals. I mean, obviously, it loses gazillions. It sells at 6 times sales or so. I don't know how accurate that stuff is. This is Lyft. Also loses a lot. 8 times. So Lyft is more expensive from a price to sales. Okay, so there's my point. When I'm looking at a growth company, and this is like the big daddy of all growth companies right now as far as concept, I don't look at how profitable they are. I look at their sales. How aggressively are they growing? So when I heard the report yesterday, they dropped tremendously in the growth rate. That was my worry. And then he came on and said, hey, I'm not worried about it because it's unit sales that we're looking for. So I get it. So that's what I'm looking at. The potential sales, the big bucket. That's what Amazon did for a decade. If you had sold it, somebody said yesterday that when they come to IPO, they have to be profitable or something along those lines. It's like, what? Since when? You come to IPO, they get money to grow even faster than you're already growing. So according to that person, which I think was Tim something on CNBC, that means that Amazon should have stayed private for 10 years until they turned a profit. I forget how far back they turned a profit, but that's not the point. Evaluate every company on its own, but the concept is it's going to be bigger than just transporting people. And people and experts are just focusing on that. How long will it take them to stop, classifying the drivers as this or as that? It's piddly crap in the long term. So I look at the chart. So this is Uber since the IPO. It IPO'd and it rallied, botched IPO, mind you, and it rallied and yay, and then whoa, and way. Then this was the reaction to Lyft yesterday. Clearly rejected the trend line and fell back below it. A few important things I'm seeing here from a trading perspective. So from a concept perspective, if you missed the IPO and you missed the dip, there it is. It's almost there again. I mean, this is as low as it's going to get, maybe less. So here are 3 tough tests. This week the market was like falling out of bed. The market. We had, oh my God, the world is ending, China currency. And then, oh my God, the world is ending. I forgot what was the second one. Oh, the 10-year rate is falling to 1.6. And then, wait, no, the world is not ending. Let's rally. And then now this. So let's call this support for now. So if I'm shorting against all of the support. So if the whole market collapses next week, sure, this will be breached probably. But assuming that we won't collapse, we'll just trade in the range we are, this in theory should be support. And if not, it's going to go down to the all-time lows, which is $3-4 below it. in the long term, it didn't matter if somebody sold Amazon at 50 or 47. That's my point. Or Google at 89, I think it came out 80, 85. If they sell it, if they got in at 90 or 85, did it really matter much? No. So what about this candle? This is a daily candle. Every candle is 1 day. This is called a doji. What it is, it's indecision to me. The market opened, they tried to rally, they tried to fall, and they're back to the middle. So if they close here, it's the kind of them saying, I love it. No, wait, I hate it. No, wait, I have no idea. Let's wait 1 more day. Indecision. So what happens the next day? Usually the next day, it's about the size of 2 candles because they wanted to do something here. They didn't do it. The next day, maybe they get a clue and they do it twice as much, roughly. So up or down, I don't know, but it should be a good candle. Now there's a little gap here. And usually they like to close gaps. Not every gap gets closed, but it's going to be probably market dependent. So if the market opens up on Monday, I am bullish markets. I'll tell you why in a second. So if we open up on Monday, then this tizzy will pass. If I'm holding Uber stock, I'm not selling it because if I have the thesis of it being a long-term buy, nothing in this report said they changed their mind and they're going to fail. That's the easy way to say it. So this is not a recommendation for anybody to buy it or sell it. This is my perspective. If I'm holding the stock, I obviously bought it because I thought they had potential. There's no way I should sell it from one report, unless my specific reason is gone. And if I'm looking to go long the stock, and I'm hesitating, I wanted to buy it before the report, but I was waiting for the report, and now it fell. Same reason of not selling it. I should still buy it because that was my decision to do it beforehand. If I was bearish and I'm short the stock, I don't cover because it just made me more money and they gave me more reason to be more convicted in whatever reason I shorted it. But I think the odds over the long term are in favor of a higher stock price for Uber. Whether they become profitable next year or the year after that, the concept is top line. What's the company going to be like 10 years from now? I'm not saying I'm going to hold it for 10 years. I'm saying that this is the only stock that I've seen in a long time that could be Amazon. Amazon started selling books, and look what they do now. That's because their thought is vertical, 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 as opposed to lift. I'm just going to deliver people here. Period. So these guys are not doing this. They have broad vision. That's my perception. I could be wrong, but I have time. You can't kill the thesis like that in one report. That's my opinion on Uber. And by the way, I'm not a Wall Street expert, but this is an opinion from Main Street. You know where to reach me.